Hi, everyone. Welcome to this session on how to measure and manage carbon emissions in your organization. This is a beginner level session, which means that no prior knowledge is required. We will start by covering the basics to make sure everyone is on the same page. My name is Stefania Chica. I'm a carbon consultant at Action Sustainability. Most of my work involves supporting clients to understand their own carbon emissions and also coming up with strategies that helps them reduce their impact on the planet. Before we start, I'd like to tell you a little bit more about Action Sustainability in case this is the first time you hear from us. We are a consultancy firm based in London with more than 25 years of experience providing advisory services and digital tools for all aspects of social, environmental, and economic sustainability. We are the company behind the award-winning Supply Chain Sustainability School. You might have heard about the school. The school is an industry-wide initiative that was designed to help upskill the supply chain in sustainability. We now have more than 50,000 members in the school, and they're receiving training from us on several topics, including carbon, social value, sustainable procurement, modern slavery, among others. So if you haven't checked the school yet, I invite you to do so at supplychainschool.co.uk. All the training and all the material provided by the school is completely free. So coming back to Action Sustainability, our services focus on the topics that you're seeing on the screen right now. We've helped clients develop their sustainability strategies. We've also undertaken carbon footprinting for some organizations. We've done the verification of their carbon footprinting as well. We've got experts in sustainable procurement, in social value and modern slavery. So if any of these areas are of interest to you, or if you're looking to have some support with this, please do get in touch with us. We will be happy to help. Our website is actionsustainability.com, and in there you're going to find more information about what we do, the clients we've helped, and our contact details as well. So without further ado, let's check the agenda that we have prepared for today. As I said, this is an introductory level session. So we're going to start by explaining why do we have to report our emissions in the first place. And then we're going to review the process to measure those emissions, including a framework to do that, examples of some carbon calculations, and also tips to collect the data that you need in order to do those calculations. Finally, in the last section, we're going to speak about how digital tools can help you in this process. I'm going to focus specifically on the carbon calculator, which is a free platform that we developed at Action Sustainability to help organizations calculate their emissions. I hope you find this useful. If you have any questions, please drop them in the Q&A section. We're going to have some time at the end to go through those, and I'm going to try to answer as many questions as I can. Also, you will receive a copy of the slides later this week, so you don't have to take too many notes. Okay, so let's begin with the fundamental question of why are we trying to reduce our carbon emissions in the first place? The short answer to that is climate change. As many of you may know already, climate change is one of the biggest challenges that humanity is facing at the moment. When we talk about climate change, we're referring to these incremental changes in the Earth temperature. And here it's really important to make that distinction between climate and weather, because that's not really the same thing. Weather is what we experience every day. For example, the weather in London today could be around 10 or 12 degrees, whereas climate is what we see over a long period of time, usually 30 years or more. And when we talk about climate change, we refer to this trend over time. Now, what we know for sure is that human activities like burning fossil fuels on a large scale are accelerating this global warming process, and as a consequence, the Earth temperature is increasing. So in other words, we're looking at a hotter planet. And I'm sure, again, some of you might be familiar with these pictures. These pictures exemplify the effects of climate change. We've got forest fires in Australia and California, and then more recently in the south of Europe as well. Not that long ago, we saw forest fires in Greece and also in Croatia, which caused huge disruptions. We can also see hurricanes in the Caribbean, shrinking glaciers, and other events that, although are natural events, they are now happening more frequently, and they're also happening more extremely than ever before. In the UK, for example, we see more frequent flooding events, more frequent storms, and that is because climate change is a multiplier, which means that it takes existing weather patterns and it makes them more extreme. So in order to tackle climate change, it is imperative that all of us do our part to reduce our carbon impact. The UK specifically is looking to reach net zero by 2050, which basically means that as a country, the UK wants to reduce its carbon emissions to as close to zero as possible by 2050. And there is legislation on that called the Climate Change Act. Now, from the organizational standpoint, carbon or climate is part of a more holistic approach to sustainability. If we talk about ESG, for example, carbon is part of that environmental sphere of ESG. For those who haven't heard about ESG before, it stands for environmental, social, and governance. And this is basically a framework to help companies measure their environmental, social, and governance impacts. So my point here is that carbon is one of the elements that we should be focusing on if we are trying to become a more sustainable business. In fact, reducing carbon emissions is now a top priority for companies around the world, and the UK is no different. The graph that you're seeing here on the right-hand side is a survey run by Sustainalytics, where they asked several companies in the UK what were their sustainability priorities for 2023. And as you can see here at the top, an overwhelming majority, so 84%, said that reducing carbon emissions from their own operations was the top priority. Similarly, if we look at the European Union, for example, almost 90% of SMEs are already working towards environmental sustainability, which includes this topic of carbon emissions. This is not to say that carbon is the only topic that organizations should care about, okay? There are other sustainability areas that you should be looking at as well, and that are equally important. So yes, carbon is really, really important, but let's not have a carbon tunnel vision. Not everything in sustainability is about carbon. In the UK, disclosing carbon emissions is a legal requirement for some companies. An example that I can give you of that is SECR, or the Streamlined Energy and Carbon Reporting Scheme, which basically mandates large organizations to report on how much energy they use and the associated emissions every single year. And that's just one example. We've also noticed that besides these legal requirements, there are other companies who voluntarily report on their carbon emissions simply because it kind of helps them demonstrate that they're serious about reducing their impact on the planet. So these companies might be reporting through voluntary initiatives, such as the Carbon Disclosure Project or the Science-Based Target Initiative, which is a global organization that helps businesses set their own carbon reduction targets. I wouldn't be surprised if some of you are already looking into this, or if you have clients who are reporting against these frameworks, and therefore they're asking you to do the same. This is a sort of cascade effect. I hope it's now a bit clearer why organizations report on carbon emissions. If you have a different motivation to do so, please type it below. I'd love to hear about that. In this next section, we're going to cover how organizations measure their carbon emissions. what you're seeing on the screen right now are the key elements of a carbon reduction strategy. So the first step for an organization who has decided to tackle its climate impact is to first, define the scope of the analysis. In other words, what are your boundaries? What are you going to include in your carbon analysis? What is going to be your target year? And so forth and so on. So that's step number one. Step number two is the measurement piece, which is all about collecting data and also doing the carbon calculations that are required. Once you do these calculations, you'll be able to identify your carbon hotspots, where most of your carbon impact is coming from, which areas are going to be your priorities. Step three is about developing, the strategies that are going to help you target those hotspots so you can reduce your emissions more efficiently. Once you've done everything possible to reduce your emissions, but there is some residual carbon, you can opt for offsetting, which is step number 4 here. So offsetting is a compensation scheme for your residual carbon. It means compensating for the emissions that arise from your organization in one place through carbon avoidance or carbon removal activities in another place. So it's a balancing approach. Now, I think it's fair to say that there are pros and cons on this topic. So if you are investing in offsetting schemes, please do your due diligence first. That is a very important thing to keep in mind. And then the final step is to report your findings, both positive and negative, and share it with the relevant stakeholders. So usually organizations publish their carbon emissions on a yearly basis. They do it as part of their annual sustainability reports, and it's usually publicly available information that you can find in their websites. Now, just to put things into context, in today's webinar, we are going to focus on the measurement piece, which is the second step in this process, okay? So moving on, we at Action Sustainability use this framework to measure the carbon performance of our clients. It is quite simple and it gives you all the information you need. In fact, we use it for several sustainability areas, not only for carbon. And I'm going to explain what the framework means. So step 1 is to have a goal, okay? So this means having an overall objective that you would like to achieve in terms of carbon. In this specific example, the goal for this organization is to reduce their impact on climate change, which basically means reducing their carbon emissions, okay? Once you know your goal, you can define your specific targets, which means that you need to put a number in it. That is step 2. An example of a target for this business is that they want to be net zero by 2050, okay? Another important consideration when we talk about targets is that these targets must be science-based, which means that these targets should align with the science of the Paris Climate Agreement to limit emissions to no more than 1.5 degrees. And how can you do that? Well, there are several options, but one of those options is to follow the process that has been established by the Science Based Target Initiative. As I said, they are an organization that helps companies set their carbon reduction targets based on science. If you want more information on that, you can check their website, which I believe it's sciencebasedtargets.org. So moving on to step number 3, you need to have an indicator that helps you track progress, right? So in this case, the indicator is the tons of carbon emissions that your company emits. And you can use this indicator to compare how well or how poorly you've performed versus the previous period, which is usually the previous year. And the last step in this process is to put in place the metrics that are going to help you calculate your indicator. Now, when I say metrics, I'm referring to the data that you need to collect to do your calculations. And just to give you a couple of examples, that might include how much fuel you consume in your organization, how much electricity you've purchased from the grid, etc. We're gonna look at that in more detail later, okay? But just to summarize, you first need a goal, then you need a target, then an indicator that helps you track if you're meeting those targets or not, and finally, the metrics that will help you calculate your indicator. There are guidelines and standards that can help you calculate your emissions, and the one I want to mention today is the Greenhouse Gas Protocol, which is the one on the left-hand side. This is the most widely used standard. It is consistent, and I always say that it's like the Bible of carbon accounting because it explains step by step how you can build your carbon inventory, how you can do these calculations, and it gives you different methods as well on what type of data you can collect in order to do your carbon inventory. So if you need a specific guidance on how to report emissions, I would highly recommend to check the Greenhouse Gas Protocol. It is available for free online. You can simply Google it, okay? Now, in the Greenhouse Gas Protocol, they give you several options to establish the boundaries of your carbon assessment, or in other words, to define what you're going to include in this exercise. And depending on which approach you use, you will have to include different things. I'm not going to go into too much detail on this because this is an introductory level session. But in summary, there are 3 approaches that you can choose from. There's no right or wrong answer. You can choose any of the 3 depending on the nature of your company and also how difficult or how easy it is for you to gather data. So the first approach is called the equity share approach. And this is a way of accounting carbon according to your share in the operations. So in other words, it's about your economic interest. An example of that are joint ventures. So if your company, for example, has a 50% share in a joint venture, then you will be accountable for 50% of those emissions, okay? The other approach is called the financial control approach. And as the name implies, it means that a company accounts for the emissions over which it has financial control. Because if you direct how the money is spent and where the money is spent, it means that you have an influence on how much carbon is being emitted, okay? And therefore you have to take into account those emissions. On the other hand, operational control means that a company accounts for the emissions over which it has operational control. Now, in most cases, organizations have both financial and operational control over their operations, which means that they own their assets, they control their operations, and they also control their finances. So it's quite straightforward. But there are other organizations with more complex structures, for example, joint ventures, and that's why we have all these 3 types of approaches to account for that. There is an entire section on this in the Greenhouse Gas Protocol if you want to investigate this further. Now, the protocol classifies emissions into 3 categories or scopes called Scope 1, Scope 2, and Scope 3, as you are seeing on this diagram. I'm going to argue that this concept of scopes is the most important concept in carbon accounting, okay? If there's anything I'd like you to take away from this session is an understanding of what scopes are and what falls into each one of them, because this is really the foundation of everything. So I'm going to take some time to go through this in detail. So as I said, the graph classifies emissions into 3 categories. The first category is called Scope 1, and it's the section here in green in the center of the diagram. So these emissions, Scope 1 emissions, are the ones generated from the sources that you own or control, such as the fleet vehicles that you own, okay? That's why they're called your direct emissions. What are some examples of Scope 1 emissions? Well, as I said, the emissions generated from driving the company's vehicles, the emissions generated from the use of any fuel to operate your plant and equipment in your company, any fugitive emissions. Those are examples of Scope 1. On the other hand, indirect emissions are emissions that occur somewhere else, but they're still a consequence of your activities. So scope 2 and scope 3 are both indirect emissions. Let's talk about scope 2 first, which is here on the left-hand side in gray. So scope 2 refers to your electricity consumption, okay? These emissions are caused indirectly by your consumption of electricity, heat and steam, and therefore you're indirectly responsible for them. Any other indirect emission that is not electricity is going to fall under your scope 3, okay? And this can happen upstream, as you're seeing on the left-hand side in purple, or downstream, as you're seeing on the right-hand side, also in purple. What is the difference between upstream and downstream scope 3? Well, put it very simply, upstream is everything you need to produce your products. For example, any materials that you buy from your suppliers, any water that you consume, employee commuting, that would fall under the upstream category. And on the other hand, downstream is everything related to the consumption of that product once you sell it. For example, any downstream transportation and distribution, or the end of life treatment of those products. Now, according to the Greenhouse Gas Protocol, there are 15 categories within Scope 3, and you can see them here in this graph. But not all of those categories are applicable to all organizations, okay? Just to mention a few examples of these categories. On the upstream side, we've got emissions from the products you buy from your suppliers, which is category 1. We've got capital goods, leased assets, employee commuting, and then in the downstream category, you've got investments, franchises, use of sold products, etc., etc. Scope 3 is honestly a topic on its own. There is a huge focus on Scope 3 at the moment, so we're going to continue to dive deeper into that later. The key takeaway from this slide is that if you want to provide a transparent view of your emissions as a company, you need to include both your direct and your indirect emissions, okay? Where does data come from? Well, now that it's clear what falls into each scope and what scopes are, the next step is to start collecting activity data to calculate your emissions, okay? What kind of data do you have to collect? Here are a couple of examples, so you can have some ideas of what to look for, but please bear in mind that this is not an exhaustive list, okay? This is just a couple of examples. So let's start with scope 1. If you want to calculate your scope 1, which is the section here in orange, you need to look into your consumption of fuels for your own vehicles and the equipment that you operate in your organization, and you also need to look into your fugitive emissions. So to be more precise, you need to collect data such as how many liters of diesel, how many liters of petrol, how many kilowatt hours of natural gas you're using, etc. Those would be examples of scope 1 data. When we talk about scope 2, we refer to your electricity consumption. So that's the data that you can get from your electricity bill or from your electric meter readings. And then when we talk about scope 3, we're facing a more challenging situation because, as we saw earlier, there are 15 categories within scope 3. But I'm just going to mention some examples. You will need to collect data on employee commuting, which is something you can do by surveying your staff and asking them how they get to work. Do they use public transport? Do they drive? How many miles do they do? So that's one of the categories. Another example within scope 3 is any waste that you generate in your operations. So in this case, you need to know the type of waste, the amount of waste, and the destination, okay? For instance, a company in the construction sector might produce, let's say, 1.5 tons of construction waste that is sent to landfills. That is the kind of information that you need. And you might be able to find this in the reports from your waste management company, for example. The final example I'm going to give on Scope 3 right now is collecting data from the products or services that you buy from your suppliers, which is the first category within Scope 3. This is information that you can get from your bill of inventory. Maybe you can get this data from your procurement departments or your financial departments. It really depends on the structure of your organization. But what you need to know specifically is the type of products that you're buying from your suppliers, the quantity. So did you buy, like, let's say if you're buying cement, how many kilograms of cement you're buying, and how much money you've spent on it, okay? As I said, we will have a section on Scope 3 later, where we're going to talk a little bit more about these kind of things. Important to mention that sometimes organizations do not have all the data they need to measure their scopes. And in those cases, it is okay to use other methods. For example, using proxy data or using extrapolation in order to cover those data gaps. I'm going to give an example here. So let's say that you're an organization who's trying to calculate your carbon footprint, and you need to calculate your scopes 1, 2, and 3. We know that for your scope 2, you need to know your electricity consumption. Now, let's say that you don't know how much electricity you consume because you only occupy a couple of offices in a building and you don't have a meter reader for your company. What can you do in that case? Well, a possible approach is to find out the electricity consumption of the entire building, and then do an approximation of how much it would correspond to you based on the number of employees, for example, or based on the floor area that you occupy. That is an example of using proxy data if you can't access or if you don't have primary data, okay? Now, if you're doing this, please make sure to include all these methods or these assumptions as part of your methodology for transparency purposes, okay? It has to be clear for everyone where the data is coming from and how you calculate it. That is best practice, and it's also going to be quite helpful for you next year when you have to repeat this exercise, okay? You might not remember how you calculated those numbers, so it's always important to keep a record of those assumptions or of those methodologies that you're using. Now that you've collected all that activity data, you need to do the actual calculations to know your carbon emissions, right? So stay with me here because this part is also important. The formula for calculating emissions is the one that you're seeing on the screen right now here at the top. Activity data times an emission factor is going to give you the amount of emissions generated. We have an example right there. So let's say that in your company, you consumed 250 liters of diesel. That's your activity data. You need to multiply that times the emission factor for diesel, which is 2.7 kilograms of CO2e. Okay, and that gives you a total of 689 kilograms of CO2e. In other words, burning 250 liters of diesel will generate 689 kilograms of carbon. Okay, that's a considerable amount. And you will need to repeat this process with all the activity data that you have collected. Something to keep in mind here is that each activity data will have its own emission factor, okay? So a key step in this process is to apply the right emission factor to the corresponding activity data. Where can you find these emission factors? That is a question I get quite often from my clients. Well, there are several databases out there that give you these numbers or these factors. The most commonly used database in the UK is DEFRA. These are the UK the UK government factors, and they get updated every year. Again, this database is available for free. So you can simply Google DEFRA conversion factors 2024, and you'll have access to this database. So the idea of doing all these calculations is that it helps you understand the carbon impact of different options, and based on that, you can make better decisions. On this slide, we have an example of doing these calculations to compare different modes of transport here on the right-hand side. So we're comparing how much carbon emissions you emit if you travel 5 kilometers by car, by train, by car, or by airplane. And as you can see here, when you use a plane, you're basically emitting 80% more of carbon emissions than when you use a train. Okay, so that's just an example of how you can use emission factors and carbon data to compare different options. And we can do a similar comparison of the carbon impact of different construction materials, for example. Here at the lower end, we've got aggregates, which have a relatively low carbon impact, so 5 kilograms of carbon per ton of aggregate. However, at the other end, we've got steel. You emit 1,500 kilograms of carbon per ton of steel, which is a considerable amount because the process to make steel requires a lot of energy, and therefore it's quite carbon intensive. Okay, so I guess again, knowing the carbon impact of your products will help you make more informed decisions. So understanding what's the carbon impact of the things you buy from your suppliers is a key step in calculating your emissions as well. Now, let's talk about the challenges when calculating emissions. One of the challenges companies face is that they might not have all the data that they need to do these calculations, right? And I touched on this point before. If that is your case, please remember that you can do extrapolations, you can do sample data, and use other methods to cover those data gaps. That is totally acceptable as long as you establish or you explain that in your methodology very, very clearly for transparency purposes. I also have to mention here that when it comes to carbon accounting, the idea is that you aim for continuous improvement and for better quality data year on year. If you don't have certain information in year one, make sure that for year two, you are implementing certain processes that enable you to collect the data in year two or in year three, okay? Another challenge when calculating emissions is the fact that this process is time consuming, right? And if you're involved in this process of carbon footprinting, you know it. It requires personnel, it requires resources, which sometimes is limited, especially if you're an SME. So my suggestion in that case could be to, try to automate the process as much as you can. For example, you can use an efficient data management system or a platform that helps you simplify those calculations because that's going to save you lots of time. And finally, I would say try to upskill on carbon. I know it's not the easiest topic or it's not the most exciting topic, but there are lots of free resources out there to help you in your carbon journey. The Supply Chain School, for example, has 4 e-learning modules on carbon that go all the way from an introduction to climate change to carbon footprinting and measurement, okay? You also get CPD points for this, and it is free, so please make the most out of it. Here is a list of other free resources that will help you in this journey. I mentioned the DEFRA database of conversion factors earlier, and here you can find the link to the latest version, the 2024 version. There's another database as well that is specifically For construction materials in the UK, it's called the Bath ICE database. And as I said, it's a list of conversion factors for products used in the construction sector. In case you need very specific conversion factors, that's something that might be helpful. There are also free carbon calculators out there that can do the calculations for you, which is going to save you a lot of time. One of those calculators is the one we developed at Action Sustainability. It is a free platform that helps companies calculate their emissions on a yearly basis and then track progress over time. There's another carbon calculator from the Carbon Trust, which is specifically for SMEs. And many others, as you can see on this slide. Remember that you will get a copy of these slides so you can access all the links that you're seeing on the screen. Okay, so that brings me to my next point, which is around measuring your scope 3. This is the fun part. So generally speaking, most of your carbon as an organization will come from your scope 3, which are your indirect emissions or the emissions embedded in your value chain. Scope 3 is a huge topic right now, and companies are working really, really hard to collect this data and to have a better understanding of their scope 3. I'm going to bring this graph up again so we can dive a bit deeper into scope 3. So remember, we said scope 3 was divided into 15 categories, which can happen upstream or downstream, as you're seeing here. I'm going to explain very briefly what they are so you have a clearer idea. On the left-hand side, we've got upstream scope 3. This is everything you need to produce your products, okay? For example, any materials or any products that you buy from your suppliers. That is category 1, and it's called purchased goods and services. This is a very important category within scope 3 because it usually represents a huge chunk of emissions. Then we have capital goods, which refers to the emissions from the equipment or the machinery that you're using in your factory. Upstream transportation and distribution, which are the emissions from transporting products before they reach your company. We also have waste generated in operations, which refers to the disposal and treatment of waste. So things like how much waste you're sending to landfills or how much waste you're recycling would fall under this category. Another category here is business travel. These are emissions from employee travel for business purposes. For example, every time you take a flight or you take a train as an employee to attend a work meeting, it would fall under the business travel category. We then have employee commuting. So this refers to the commute to and from work. So, for example, if employees are driving their own cars or if they're taking public transport, that's going to fall under that category. And finally, upstream leased assets, which are emissions from leased assets that the company uses in its operation, but it doesn't own. For example, if you're renting office space. Now, on the downstream category, downstream transportation and distribution are emissions from transporting products after leaving the company. For example, shipping your products to the end customer. Okay, that would fall under that category. Then we have processing of sold products, which are emissions from further processing of products by third parties after you sell the product. Use of sold products are emissions from the use of those products by the end customer. Okay, for example, if you're an automaker, the emissions from driving those vehicles by the new owners would fall under this category, use of sold products. Then we have end-of-life treatment of sold products, which are emissions from disposing of products after their useful life. Downstream leased assets are emissions from assets leased to others, such as equipment or buildings. Franchises here are emissions from operations of franchises that you as a company do not directly own or do not operate. And finally, investments, which are emissions from investments that your company holds in other businesses. For example, your company might be investing in a coal mine, or it might be investing on oil production, or in any sector. Okay, that's gonna fall under the investments category. I think this shows very clearly the complexity and the reach of Scope 3, right? For most companies, this process of calculating Scope 3 is a work in progress. You might not have all the data you need for Scope 3 this year, but the idea is that year on year, you can improve your carbon inventory. And as I said, that you put those processes in place that are going to help you collect this data. For example, if category 1 of Scope 3 is a big carbon hotspot for you, remember, category 1 are the emissions from the things you buy from your suppliers. Then, even if you don't have the data in year 1, what you can do is start engaging those suppliers as soon as possible to start asking about the carbon information, right? To ask if they have carbon data, or to ask if they have any alternative products that have a lower carbon impact that they could offer instead of the regular ones, okay? Final thing on this topic of calculating emissions from suppliers. So this is category 1 of Scope 3. There are different methods to do that calculation, depending on the type of data that you have available in your company. However, the level of robustness or the level of accuracy of your calculations is going to depend on the method that you use. This part is a little bit more technical, but I get this question a lot. So I thought it was important to include it in this training. So according to the GHG protocol, there are 4 calculation methods that you can use, and we're going to go through them one by one. So the most accurate method is the supplier-specific method here at the top, which means that you're asking your suppliers for a detailed and product-specific information, okay? For example, you might be asking your suppliers for environmental product declarations, also called EPDs, or any other life cycle assessment for the products that you buy from them, okay? Now, if this is not available, then you can use an alternative methodology. So now we move on to the second most accurate, which is the hybrid method. This is a mix of supplier-specific data and industry average data for when information is not available. For example, you could use supplier-specific data for those products that are really significant for you, and then for other products that are less significant, you can rely on industry averages. That could be an example of the hybrid methodology. Then the third method that you're seeing here is less accurate, and it's called the average data method. It means that you're only using industry average emission factors to estimate emissions. And sorry, the least accurate method of these 4 is the last one, which is the one based on spend. So this means that you're using financial data to calculate emissions. Now, as an industry, we're trying to move away from spent data to get more supplier-specific data, or to at least utilize a hybrid methodology, okay? Do we have any questions on this? Please put them in the Q&A section. I know it's a lot to take it at once, but you will have a copy of the slides so you can review the material again. Decide which tools to use. Okay, so technology and tools are very important when it comes to reporting and managing your carbon emissions. I would say that traditionally, companies have managed to do this process manually, so they could manually enter data into Excel files. But what we're seeing now is a proliferation of platforms and systems that can help you with this. One of those is the carbon calculator that we developed at Action Sustainability. This is a free platform that helps companies calculate their emissions. In a nutshell, the system does the carbon calculations on your behalf using different factors mostly. So you don't have to do all of that manually. Now, you're going to be asked to provide your activity data, such as how much diesel, how much petrol, how much natural gas, how much electricity you've purchased, etc. And then based on that information, the system will calculate emissions. Then the results of those calculations are going to be presented in a dashboard of analytics, like the ones you're seeing on the screen right now. So you can identify, well, what's your scope 1, what's your scope 2, what's your scope 3, and also identify the source of emissions, right? Where is most of your carbon coming from? Where are your carbon hotspots? At the moment, we have more than 1,000 companies using the carbon calculator for their emissions. And this is mostly because their clients are asking them to provide carbon information, okay? So remember, this is like a cascade effect. So if you're a supplier to any of the companies that you see on the screen right now, chances are that you have already been asked to use this calculator. I'd like to show you very quickly how it works so you can play around with it in your own time. As I said, it is completely free, so bear with me a second. So let's start from the beginning. Hopefully you are seeing my screen right now. This is the platform, the carbon calculator that we developed at AES. You can access it through the link carbon.sustainabilitytool.com. This is the landing page, and here you're going to find quite useful information about how to fill in the carbon calculator if you haven't done that before. So if you want to do this, I would highly encourage you to check this section called Measure Your Own Emissions. So I'm going to click there. And in there, you're going to have all the all the resources, all the videos, the short videos, and the guides that will help you complete the carbon calculator. I'm just going to scroll down. So these are very short videos that explain you step by step how to register, how to fill in the first tab or the second tab. And one resource that I find quite helpful for organizations who are doing this for the very first time is the calculator guide. So if you scroll down, it reads download the carbon calculator guide. So this is a guide that explains every section of the carbon calculator. It tells you what sort of information you should be collecting, where you can find that information, and what to do in case you don't have that information available. Okay, so quite an important guide, this one right here. I'm going to come back to the main landing page. So to create an account in the calculator, as I said, it is free. And what you need to do is to select this option, create a supplier account. The registration process is really simple. You need your name, your email address, and the name of your company, okay? When you type the name of your company, just make sure it is the full name. For example, I would type Action Sustainability instead of AS, just because it makes it easier to identify organizations like that when you add the complete name of your company. So that being said, I'm going to show you how the report looks like, because I think that's the part you're interested in. So the report has 4 steps. In step number 1, you select your reporting period. So this is annual reporting. So you need to select the year you're going to report data for. Step number 2 is company information. So we will ask what sort of industry you work on, very basic stuff. And then step 3 is a carbon report. So I'm going to click there to show you the kind of data that you need to provide. So as you can see, there are several tabs here. And you'll need to fill in those tabs so the system calculates your emissions. There are tabs that you can skip if you don't have that information, but keep in mind that the more data you provide, the more accurate your footprint is going to be. So I'm going to walk you through some of the tabs to explain how this works. So here the first tab is called transport, and as you can see in blue, there is a definition of what we're looking for, what this means. The first section under the transport tab is called company transport. You can hover over the information icon to see what this means, but in summary, it basically means any distance traveled in vehicles owned by your company. What you're seeing here are the most common vehicle types. So for example, diesel cars, petrol vans, diesel vans, etc. So what I've done here is to say, in my company, this year, I traveled 1,000 miles in a diesel car and 2,000 miles in my petrol cars, okay? You can see that there is a comment area next to each field, and that is for you to add any explanatory notes or any important or relevant information that you think should go in there. One of my recommendations is always to add the source of that data there, okay? Again, this is just thinking about the future. If you have to repeat this exercise again next year, now you know where the data was coming from, okay? You might say, well, this data about transport came from my fuel cards, or this data about electricity came from my electricity bill, okay? So that's how you can use that comment area. The second section is about third-party transport. So this is any transport in vehicles not owned by your organization. And the logic is the same. We're giving you several options for vehicles. You will select the one that is applicable to you and simply add the number of miles here. If there are options that are not applicable to your organization, so let's say no diesel vans or no petrol vans, you simply select NA here on the right-hand side, and that will gray out the system. Also here on the third-party transport, you could add information on public transportation. So that is available right here in this drop-down list. If you want to add data on, for example, buses, international air travel, train, etc. So that is under this section. Once you finish filling in this information, you select mark section as complete, and then you move on to the second one, which is fossil fuels. Fuels is about the quantity of fuels that you use for your plant and equipment. So for example, if you use diesel or petrol or any sort of biodiesel, you can add the quantity here. Now, if we talk about the previous section, there are some companies who don't record their travel data in terms of miles or kilometers, but they know how much fuel they're consuming. So if that's your case, you can add that amount of fuel here under this tab. But remember, when it comes to transport, it's one or the other. You either input the distance or you input the amount of fuel. Otherwise, you could be double counting carbon. There is data on fugitive emissions, which are any unintentional leakages of greenhouse gases. If you have this data, select yes. If no, just say no and move on to the second section. The next tab is electricity. So electricity is the electricity that you purchase from the grid. What you need to input is a number of kilowatt hours, okay? This is information that you can get from your electricity bill or your electric meter reads. There are two additional questions here. Do you purchase renewable energy from your grid energy supplier? So let's say that I don't. So I'm just going to mark no. Do you generate renewable energy on site? So let's say that I don't. So I'm just going to type no. So electricity is your scope 2, remember. Then anything after this tab is your scope 3, but it's not all the 15 categories of scope 3, okay? This is just what we call the easy scope 3. And the reason why we don't include all other categories is because the purpose of this platform was to help companies calculate their emissions, but to make this process as easy as possible and to help those organizations who are probably doing this for the first time. So we didn't want to make it extra and overly complicated. So the other sections that you're seeing here is materials, waste, water, and other emissions. So I'm just going to go under the waste tab. So the question is, do you have information on waste? So I've selected yes. And then the system is giving me all the different types of waste that I could select from. Is it refuse waste? Is it electrical waste, construction waste, metal waste, etc.? So let's say that in my organization, what I have is construction waste. So for construction waste, I will select yes. And then in the drop-down list, I need to specify the type of waste and the destination. So we're going to take the aggregates example. Let's say that my waste is aggregates, so here at the top, and I sent all that aggregates waste to landfill. So I'm going to select aggregates sent to landfill. And what I need to do now is to add the quantity. So let's say 0.2. And then based on this information, the system will calculate emissions. Okay, so water is quite simple. It's just asking how many liters of water you've consumed in your organization for this year. So you can just add information from your water bill. We have other emissions. Other emissions is an optional section. So as I said, in this calculator, we're not covering all the 15 categories of scope 3, okay? However, if you're an organization who's done the calculation, let's say, of carbon emissions from your franchises and your investments, which is part of your scope 3, and you would like to add it here, you can do that here in this tab. So you would come here under other scope 3, you would add the amount of carbon in tons of carbon, and then I would suggest you add a comment to explain what is that, like, where is that data coming from, which specific category of scope 3 is that included. Okay, so that's a quick example of how you can use the carbon calculator to calculate your emissions, especially if it's the first time that you are doing that now. And that's also the end of the content that we've prepared for today's session. I hope you learned something new. I'm just going to check very quickly if we have some questions that are repeating, because I can see there are lots. So let's try to pick the most common ones. Okay, so we have a question about offsetting. Hi, you mentioned early in the presentation that organizations need to be cautious about purchasing carbon credits for offsetting. Could you elaborate on this? So yes, basically there's been several studies in the last few years kind of questioning the effectiveness of carbon projects all over the world. One of the insights that they came up with is that some of these carbon projects were kind of double counting carbon, so they were being sold twice, or that they weren't delivering the carbon benefits that they were supposed to do. So if you're investing in an offsetting scheme, please make sure that it is a verified sort of project, okay? Because you want to make sure that you invest in projects that really reduce your carbon impact. Can you provide the link to the DEFRA database for emission factors? It is part of the slide deck, so I will share that later this week. For the emission factor, is it DEFRA conversion factor? I assume you're talking about the carbon calculator. Yes, we use DEFRA conversion factors for the carbon calculator, except for the section on materials. The tab on materials uses conversion factors from a database called PathICE, but everything else is DEFRA. The carbon emissions depend on the manufacturing process. For example, bricks. Our studies on bricks show the variation in values. How do you compensate for this? That is a very good point. So as a supplier, if you need to do a calculation of the carbon impact of the bricks that you fabricate, the most accurate way of doing that is using data that is specific to your break. So that's the slide I was talking about, different methods to calculate data from suppliers. Okay, so if I buy a rig from you and you want to show that you in your manufacturing process you are efficient in terms of energy, for example, you could demonstrate that through an environmental product declaration or through any other life cycle assessment. Okay, this is basically a document that would tell me exactly what is the environmental impact of your specific product. So that is a way of showcasing those benefits that you're talking about, instead of using industry averages that are not taking into account your own process. Where can we find more detail on those 4 different methods? Please check the greenhouse gas protocol. If you Google Scope 3 guidance, greenhouse gas protocol, there is a document, I think it's around 100 pages, and it's got it's got information about each one of the categories, and you will find information about those methods under the first category, purchase goods and services. Can you change the reporting period in the carbon calculator? So unfortunately, you cannot. The idea of the carbon calculator is that we provide a standardized approach to measuring carbon. So we do it on an annual basis for everyone. Okay. You can select the year that you want to report for. So let's say I want to report the data for 2022. So you can select the year 2022 and simply add a comment saying that that year corresponds to, let's say, to your own financial year, which, I don't know, probably runs from April to March. Okay, so you can't change the date in the system, but you can add an explanatory comment to say that it corresponds to your own year. How do you calculate working from home emissions? So the easiest way is to check the DEFRA database that I was talking about. That database has got the conversion factors for all the activity data that you might need. And there's one tab that talks about working from home emissions. And it basically takes into account how many hours are worked from home. And yeah, the methodology is at the top. You can find that information there. So thank you very much for your questions and for attending this webinar. I hope it was useful, and I hope to see you at another presentation and another webinar from Action Sustainability. Bye, everyone.